What does IvyZelman think about the housing market? How about Goldman Sachs, Lance Lambert? And let's, of course, talk about the Fed meeting minutes. All of that coming from the Danube River in Europe. That is actually Austria over there. And on this side is Germany, or at least that's what a local guide told me. I honestly don't know if it's true, but let's go with it. So, what did IvyZelman have to say today about the housing market? She expects it to be extremely depressed and likely for the next couple of years. She thinks that the only thing that could fix the housing market is rates. Now, we have to be very clear. When IvyZelman speaks, what is she talking about the housing market being depressed? Folks, this is what I brought to you about a year ago. Transactions. IvyZelman is talking about the real estate industry and all of the other components that, for example, Home Depot and Lowe's, right? The entire economy around housing. She expects it to be depressed through 2025. And obviously, I agree with her. I think we could be below 5 million transactions, perhaps for 4 or 5 years. And if you don't remember, we were just over 6 million a couple of years ago. So again, I think she's right. I think we are going to have a pretty depressed real estate market. I do think, like I talked about yesterday, we have hit the transaction bottom. I thought it would be 3.8 million. It actually came in at 3.79. I think that is the bottom, but we could be on the bottom for a while. This is no V-shape, no U-shape recovery. We're going to be between 3.8 and 4.2, I think, for quite a while. I was asked a question the other day because there's a lot of people talking about transactions being at 3.8 million. We haven't been here since 2010. Now, if you have my book, One Rental at a Time, you know that 2010 was a particularly busy year for Olivia and I. So again, when the transactions were down, we were actually frequent buyers. So let me talk about what 2010 was about first. We obviously were a couple of years into the declining real estate market. It was starting to hit headlines and things of that nature. But what we really got after was banks and lending. Lending stopped, right? There was 10 mortgages and then 4. So it was really that lending turned off and banks they just didn't want to lend. Today, it is about rates and affordability. We have rather tight credit conditions. So again, not a lot of transactions, but it is completely different than 2010. Fear was everywhere. Headlines were everywhere. It was a great time to buy if you could line stuff up, but it was very, I remember 2010 pretty vividly. So what's talking about Goldman Sachs? Goldman Sachs is out talking about 98% of mortgages being below existing rates. So below 7.5, if you will. Why is that important? There's a lot of people talking about 8-9% rates crushing the housing market. It's already happened. And I do believe we have seen peak rates. The question is, how soon do we get below 7? How soon do we get below 7? I think the rates that I saw this morning were like 7.3, 7.31. That was pretty fast, right? We were just over 8% 3 weeks ago, 4 weeks ago. So again, pretty interesting stuff. Back to talking about market conditions, right? Market conditions. Remember we talked about the market thinking there's going to be 4 rate cuts? I actually went back and found this. 6 months ago, the market thought there would be 4 cuts in 2023, this year. 4 months ago, they thought there would be 3 rate cuts. 2 months ago, they thought there'd be a 50% chance of a rate increase. Now, no more rate hikes. Likely first cut in May, a 30% chance of a cut by March. Why is this important? As I said yesterday, the market's been wrong. It's been reading the Fed wrong for quite a while. And now that we have the Fed minutes, we know, or at least have a better idea, that they're not talking rate cuts. In fact, They were talking higher for longer. And one more important thing, I want to shout out Danielle DiMartino Booth. She brought this up on this channel 6 months ago when she came through. They talked about we could have a rate cut, but continue quantitative tightening, or QT. That's like putting your foot on the gas and your foot on the brake at the same time. It could get interesting. So I don't know if you've seen it this morning, but it looks like oil, right? OPEC Plus delayed a meeting where they were going to talk about perhaps cutting supply. They canceled it because the Saudis aren't on board with that. And oil now is, I think I just saw it below $74. So oil is falling. 10-year note hit a new low for the last couple of months at 4.4. Again, we were just above 5% 2 or 3 weeks ago. More signs that rates matter. Mortgage demand, right? Weekly reported by Mortgage Business Daily, I think. Mortgage demand is up 4% week on rate. 4% week on week. Rates matter. 7%, that's the number. 7% we may see some really increased demand. Because again, consumers, they just want a deal. You know what 6.99 is? It's a deal when you think it should be over 8, or your experience is over 8%. So from the Fed meeting minutes, they're going to proceed carefully. There's no talk of cuts. And again, they will continue QT, or at least think about continuing QT if they had to make a rate cut. Ed Yardeni is out talking about the roaring 20s. Actually thinks that artificial intelligence, or AI, will unleash a technology and productivity cycle. And again, he's considering it very similar to perhaps the roaring 20s. On the earnings front, we got NVIDIA. NVIDIA blew it out. They've actually, where is it? Yeah, there it is. And raised guidance. So again, NVIDIA out with some pretty strong numbers. And then Nordstrom's, I wanted to see what was going on with the high-end consumer. Sales are down 7% year on year. Customer traffic is soft, per the CEO. So again, folks, that is what's going on today. Recording this quickly from the Danube. That is Austria. That is Germany. Have a wonderful day. It is cold. Can you see that? I don't know if that shows up on video, but pretty cold. Later.